I wish the ring had never come to me. I wish none of this had happened.
You shall not pass!
Welcome to Market Makers, everyone. Your home for tomorrow's TA today. This is the crypto video. My stock market video came out just before this. Be sure to watch that video as well. Be sure to like and subscribe. Follow me on X. Guys, you want to trade the crypto markets? Check out Bitunix. Would appreciate it. The link is in the video description. Be a Market Makers VIP. There's a lot to talk about in this marketplace right now. Friday was a major flush out. The overextended stock market sold off. And for those of you that think crypto is not connected to the stock market, Friday should be a vivid reminder that it indeed very much is. Crypto sold off, bled out as well. So we're going to cover all the levels because I believe new all-time highs are ahead for Bitcoin. The targets have not been achieved. Key market structure has not been broken. And most importantly, we have a cycle that has been tracking 100% accurately since 2013, and it is yet to play out. I believe we have higher targets above us. 132 has not been hit yet, then 150 and 168. We will end up somewhere in those upper echelons because I believe the stock market also will be blowing off. Watch that stock market video. But let's start off where the money is, guys. Where the money is in total. And look at the collapse you had on Friday. You lost $1 trillion in the stock market on a daily candle, okay? Understand, if you're new to the crypto space, highly volatile. Also, depending on what crypto exchange you trade in, markets or the assets reacted differently because crypto exchanges, by and large, are centralized exchanges providing their own liquidity, okay? So keep that in mind as we click through some charts. Wherever you trade, be sure to look at the charts on the exchange that you trade on. I have a few different charts in here. A lot of them are Bitunix where I trade, but wherever you trade, be sure to look at your actual crypto charts. So this is total sold off, but most importantly, right back there in the mid, right? You're literally right back in the mid of this range, 3.85 trillion. Ultimately, to get new all-time highs, just like we did right here, you need to have more money in crypto. Let's jump to the cycle. Looking at the Bitcoin cycle, guys. When you're looking at Bitcoin, we have the cycle chart going back to 2013. We have a clear early warning system, which is our RMA. Every time it crosses the previous cycle high, that's the beach ball there, you have the new all-time high in within 30 days before the 75% collapse. 2017 there on the chart. 2021, we crossed the previous all-time high. There's the beach ball. New all-time high is in within 30 days, 75% collapse. We have not crossed the beach ball. We're at 62K. We have to cross 69K. Once we cross that beach ball, we are on a 30-day clock for the top and then the drop, okay? And the drop, if you guys haven't been watching the last, I don't know, videos, we've been talking about this for a while now, but 2026 base case is going to look like 2022. 2022 in the stock market, S&P fell 27% in the futures. You had NASDAQ fall 37%. Bitcoin fell 77%. So pay attention. People think the Bitcoin cycle is different. It's not different till it is different. It's not different on the charts. I'm going to believe the charts over what somebody says on social media, okay? Because 2026, I think, will look like 2022. The key element in that, keep in mind, when people say, no way, 75%, you have higher levels to go. But not only that, you put in these lows, each low is subsequently a higher low. So depending where we blow off at, if we get to 150, 170, you take down 75% from that, you're going to have a substantially higher low in the marketplace once again, okay? Overall, I believe the cycle is going to play out. We know that within 4 weeks, we've had the topping cycles, plus or minus 4 weeks, play out every single cycle since 2013 here on the chart. Been over this chart many, many times. Point being, we still have more room to run. Point being, in the stock market, I believe the blow-off tops are still to come. Watch that video if you didn't watch it before this one to understand, because all the markets are connected. Moving forward, 3-day chart. Look at our 3-day chart here. Had our target hit at 109, almost came up to 132. We got up to 126 and change now. This particular chart, I believe, is a Bitunix chart. You can see Bitunix fell all the way down to about 101. I think Bitunix went to 102. Bitstamp went to 107, 108. Again, look at the charts where you trade. Those are the most important charts, okay? But we're holding this key support level, big reflexive rebound, back above 109. Price currently at 114 right now. Let's move forward to a daily chart on Bitcoin. Here we are on a Bitunix chart. Open this up. By the way, guys, if you want to join our Discord, click the join button on YouTube. Get our videos on YouTube to watch, and you can join the Discord through there, or you can go to marketmakers.trade and join our Discord. Looking at Bitcoin here, you know, one thing I noticed right off the bat, right? You have this Friday sell-off, and of course, look at your Canary RSI, right? You have the low, you have the higher low, and this is where you're at right now. Now, I spent some time covering this on the stock market video, so I don't want to go too in depth in this, but you have your trading range that's formed here, right? So you have your trading range, you have a flush out. Understand how price moves. Price moves up in a wave, it retraces, then it comes back up, right? If it breaks out to the upside, that's how you get your ABC to the upside. Works the same way to the downside. Price moves down, reflexive rebound, that's your retrace. If you get another flush, right, you want to try to hold that higher low. This is how you form your W pattern to the upside. And if you don't hold that higher low and you did something like this, when you take out that lower fractal right there, that's your ABC to the downside. Right now, what Bitcoin's doing, you had your sell-off, you had your reflexive rebound. The next move, it's all about whether or not you hold this higher low, right? And then you move up to the upside. It's going to be your up leg to the blow off top. And you could say, well, how often does that happen? Well, you guys watching the channel know I talk about this all the time, but it literally just happened, right? You just have to know how to look for these patterns. You had your W right here. This is literally how they form. There you go. You have your all-time high, sell off, you make your low. You fail at Fibonacci resistance, you make a higher low, you take out that same fractal, and then you make a new all-time high. Same thing can happen here as well, okay? So when you look at this, it's important to look at Fibonacci on the daily time frame. Pull your daily candles down. Where did you fail previously? Right at the 618 at 118, right? So you fell, you sold off, held a higher low, made a new all-time high when you broke back up above 118. So where we are now, again, it's just a daily candle, right? It's only a couple days removed since Friday, so you don't have a lot of price action, but let's pull a fib. All-time high, take the fib, pull it down to the low. 618, once again, very close, 117. So the price action near term, let's flip this to like a 4 hour, get more candles. The price action near term here is going to be important to pay attention to, okay? You have your resistance levels, 50% at 114, 618 at 117, because ultimately, just keep in mind, let me draw it instead of using the marker, be a little bit clearer. Keep in mind, if you form something like this, right? If you come back down and you get that push back down to support, maybe 108, 109 again, check your exchange, wherever that support level is, but you come back down to that 108, 109, if you take out that midpoint, the 116, 117, 118, this is what you're looking for the breakout to the upside. Get that higher low structure in the marketplace, okay? You're looking for a higher low structure like you did right here. Low, failure point, higher low, breakout. Markets move in patterns, so pay attention to that. You want to flip 117, get on top of it, be aware you could easily push back down. Watch your key support structure, 108, 109 to see if that holds up. Follow me on X at Market Canary, by the way. Ethereum, same thing. We're looking at Ethereum. You've had that trading channel going on since August. You've been testing 4,100 to above 4,900, and you've been chopping around. Ethereum here made a 5-leg move. You can look at this just looking at it. Your eyes just get used to seeing this. But you have this 5-leg, 5-wave move Ethereum did for a correction, okay? So here's your wave 1, here's your 2, here's your 3, And here's your breakdown below support at wave 5, right there at 3,400 level. And now Ethereum reflexively rebound back up as well. So when you look at what Ethereum's doing, same thing I just showed you on Bitcoin. So I'm not going to draw it on every coin, but you get your wave down, reflexive rebound. Watch to see if you can hold a higher low if this pushes back down, okay? If it pushes back down, look for a higher low, and then look for it to break out above the current price, the 42.22, and that's how you get more upside in Ethereum. So let's just check our fibs here from this last leg down. Look at your fib, got above the 50, it's right there at support. 618's above you, 42.50. Get above 42.50 and base. And before you do that, you may very well have to get some selling back in the market to rebound. Everything's about a rubber band or a slingshot, right? It's all about a rubber band or a slingshot to come up to the upside. And when Bitcoin breaks back out, you're going to see everything else carry back up as well. Ethereum's holding up relatively well. Some other alts did not do as well. Nice, completed corrective move, in my opinion. Watch for a push down and then watch for a higher low. If we look at a push down, by the way, just go to your low up to your high. 618, 67.36, just call it 67.50. Right there at buying pressure. Watch that 37.50 to the downside if you sell back off. See if that level provides good support. If we look at Solana, Solana did more of your traditional three-wave correction, right? As of right now, A wave down, B wave up, C wave, right? So you basically did a three-wave correction. You look at your support structure here of fractals, right? This is even without Fibonacci. 155, you came down about 159, and you're all these markets are going to do the same thing, because after you have peak selling, right? Sell wave, buy wave. Failure point, sold off again. It's doing the same thing. Sell wave, buy wave. The key is when you're looking for a reversal, you want your sell wave to hold a higher low, and then you can start seeing that accumulation break out to the upside. That's what you're looking for when you're looking for a reversal of trend, a low, a higher low, something like that, and then going back up. So you just want to watch these levels. Key support beneath you right at that 155. If we look at Solana here, where you at on a retracement, just looking at this mid leg here, down here, right at the 50% at 198, 208 just above you at the 618. Want to get back above 208, let's call it 210, gets you back above that long-term trend line of 205. So get back above 210 and start accumulating. Again, all of these held up relatively well. Overall market structure, by the way, when you're looking at this, where's your Solana low? April, right? April sell-off. Low, higher low, higher low. As of right now, this is still a higher low. You have an overall bullish uptrend. You have a corrective move that happened in your bullish uptrend. If you look at XRP, XRP really fell and really got bought back up. 125, right? 125, you're at 258. You had that long-term accumulation with these various fractals above you to break out. But now it's all about that lower level fractal, right? So it's all just about getting back above 272 right now. And again, when you look at this from just a market structure, when you look at these fractals, you're looking at market structure, right? Look where you fell to, 233. Why is that level important? You have a lot of candles there, right? And if you go off to the left, you have more candles there. So you had a lot of buyers there, in other words. So you want to watch that level at 233, stay above it. And again, with all of these, you can look for a push up, look for some type of push down. And in the case of some of these alts, you could come down more, right? Come down to $2, $2.25, and look at this to start reversing. Overall, you need to get higher lows in the market to break out, and then you can start looking at breaking out above $3 to get some higher level targets. This key structure over here goes down to basically about $1.90, let's call it $2. So you basically have that 233 to $2. I think that's an important corridor there. Just looking at your market structure to hold that level right in this green level, okay? So if you do get a push back down, watch for this, because if you start getting a bullish pattern and you think the market has higher to go, could be a nice buying opportunity. Look at ADA. I mean, very much looks like XRP, right? A lot of these coins in the crypto space are going to track each other. Sold off all the way down to 27 cents, right? 27 cents, rebound. You're back up above 68. Overall, you had this topping structure that broke down and you came back up. It's all going to be about, I'm telling you, every single coin, including the stock markets, right? It's going to be about testing resistance, failing, and trying to hold a higher low to come back up. That's how you reverse the trend, because you have a high, lower high, lower high, lower high, low, lower low, much lower low, right? So it's going to be about trend reversal on these markets. You want to flip 78 cents, get back above it, you're at 71, get back above 78 cents, get back up towards that midpoint. And before you do that, you may end up seeing something like that, a challenge at 78, breaking back down, making a base and coming back up again. And then look at these levels, right? This is where buyers stepped in the market. So you want to look at these levels at 47.50 cents over here, mid 50s, 60s, and you can see where the buyers came in here, 63 cents. So you're at 71. Try to hold 63 cents, these higher level candles up here. If you get any more selling before you bounce back up, flip 78 cents to the upside. Hope you guys enjoyed the video, and I'll see you guys on the next one. Happy trading, everybody.